So even though we're in a bull market, what I'm seeing is a little bit of a tap on the brakes here and something that could resolve into a big move lower. So I'm going to share with you what I'm looking at right now and why I think that. But before I do, I have a goal to get to 20,000 subscribers on YouTube here. I need your help. Hit the like button, share it with a friend, and get people involved. Trading options, getting involved in the financial markets. It's no better time right now to get involved and start managing your money yourself. And I'm here to help you walk through each and every one of those steps. So here's what I'm looking at on the marketplace. Right now, we're on the SPY. And one of the things that we discuss often, especially when it comes to option trading, is where volatility is at. So if we take a look here at where volatility is on the S&P 500, which is the VIX, right now we're at 1831. Now, the low previously, the low on this chart previously was 14, and that was just in early July. So we saw a bit of a move lower, and then we started to kind of gear back up. Partially is because we are in earnings season, but what I'm looking at and starting to see a little bit of a concerning crossroad on the three major indices that I cover, which is the Russell, S&P, and the NASDAQ. So this week, we continue to see these slow grinds higher, and then a fast move lower, and then it rebounds, and then it kind of just drifts up higher, 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 and then it snaps back. Now, we can consider this a frothy market, and that has been frothy for some time, right? But eventually things resolve, and right now the major moving averages is this. I'm pretty sure this is 10 and 21 here, and so what we're seeing here on the bottom here is implied versus historical. What's concerning is that we are seeing volatility bid up, and we're seeing realized volatility not coming in line there. So if we just look at the last 20 days, you kind of see it kind of merge here. And typically, we're going to see fear greater than realized. But we are diverging to a point where one of these things have to happen. Either price movement has to expand or volatility has to come in. And we haven't seen that since going back into June here. So this is where things kind of resolve. And we've seen the tree get shaken a little bit, and we've seen some pullbacks. But, at this point, we haven't seen anything significant since last year. The other concerning thing, too, is a more active market here is the NASDAQ. And this is the one that kind of stands out a little bit more because even though we've seen some pretty interesting pullbacks here, it really hasn't been a pullback that's really just rattled the trees and scared people. And we're talking about 2% down, 3% from the highs, which is really nothing after you look at a chart and you go all the way back for the last couple of years. But any kind of pullback, that puts a little uncertainty in there. But what we're seeing here on the volatility aspect of here is that, again, implied is at 20% here and realized is at 10. It's a pretty big divergence, and either, as I mentioned, either price has to move, which means price either is going to explode higher or lower, or volatility comes in. It's typically, if price is going to move, it's going to move to the downside here. So with that in mind, the other one that is interesting here is that the S&P and the NASDAQ are the strongest. They're holding these lines here, and the weaker one has been the IWM. So when I see this, it almost makes me want to get short one or look for some kind of pairs trade. And this is where I'm looking at here. I mean, this just looks like it's just about to roll over here. We are top heavy. It made a move higher early in the year, and we are just flatline. And this is the S&P 500. I mean, the Russell, which is all small cap companies, specifically more central focused in the U.S., and they're just struggling right now. So when we look here again, this is almost in line where we see historical coming into volatility here, where volatility's at. Now this has me thinking that either this is going to move significantly and volatility is a buy here, and looking at some kind of a straddle that's based off of this. It bounced off this major moving average here just recently, kind of came off that. But these moving averages above it are concerning because those are going to become resistance. That's where supply is at, and right now we're below that. So the other two strong ones, the S&P 500 and the NASDAQ, are above that, which could break. But really the weaker one right now is this Russell. So it's just interesting to see this where the expected move is becoming more greater than what the actual is, and one of two things have to happen. Either that move has to happen or that volatility comes into play. And this is where that kind of cautionary tale is at, because we're going on two different roads here, and to get back to that, it has to come back together in one way or another. So that's really where we're at right now. And if you are in positions at this point, I would be locking things up, managing some profits here, and kind of seeing how things shake out here. So, we're coming into the end of July. As we get into August here, August tends to be a very volatile month, which is what we could be setting up for. That's why I'm sharing this with you here. So really, right now, cautious, and I wouldn't be getting aggressively long here. I think the risk, what we can see here, the risk is to the downside, and getting long here, you would be buying at some very elevated levels here. So this could pan out where, again, volatility comes into play and we continue to drift higher, and that's how it plays out. But this is where you start to take caution and understand where one market volatility is, to understanding where it's pricing and predicting where the possibility of something happening. And on indices specifically, if that's getting bid up, the fear, the volatility, that means they're protecting themselves for some kind of move lower. So that's how to walk through some markets. Really at this point, it's got to be managing risk and keeping a short leash on things, and not letting it get out of hand, because we could wake up to something like what we've seen in China, where it's just the indices are just falling off a cliff here. FXI. So yeah, interesting times to be in the marketplace, but there are ways to hedge that risk, manage that risk, and one of the major ways is be selective on your positions and just reduce your size. Manage your profits, take that off the table, use smaller risk at this moment of time, and let things kind of clear out before you start to get more aggressive. So I'll see you in the next video, and we'll talk to you then.